Weighted average examples. Assume that J-Mart uses a perpetual weighted average inventory system. During the period, it has 2 sales. Calculate the average cost per unit on hand as of June 8th when it made its first sale. So June 8th, the first sale is made of 6 units. So what is on hand at that point are 10 units at $12 and 10 units at $15. This is a weighted average that we're looking for. This is not just a normal average. So you don't take 12 and 15 and find the average of them. That's not the correct way to approach it. Coincidentally, it would actually give you the correct answer this time, but that's not always the case. So what you need to do to be able to find the weighted average cost per unit is find the total cost of the inventory available for sale and divide it by the total number of units. So currently on hand, there would be 10 at $12 for a total of $120 and 10 at $15 for a total of $150. So you'd have a total of 20 units and a total cost of $270. You would then take the $270, divide it by the total number of units to get $13.50 per unit. So what that is the weighted average cost per unit. So then for the sale, you're looking at June 8th, 6 units were sold. So they would be sold at a weighted average cost per unit of $13.50. So if they had asked for the cost of goods sold for that sale, we would calculate that as being $81. So now we're going to take this one step further. So in the previous example, we figured out the weighted average cost per unit for the first sale, which took place on June 8th. So we've already done that. Now what this problem wants us to do is to calculate the average cost per unit on hand as of June 30th when the business is making its second sale. So just as a reminder from what happened in the previous problem, we calculated the average cost, the weighted average cost per unit to be $13.50 for the units that were on hand for the June 8th sale. And 6 of those units were sold at a weighted average cost of $13.50 each. So if 6 of these units were sold, so there were a total of 20 and 6 of them were sold, now that means there are 14 left after that sale. So there are still in inventory 14 units at an average weighted cost of $13.50. And then on June 28th, 10 were purchased at a cost of $18. So now we need to use this information to determine the updated weighted average cost per unit. So that means that there were a total of 24 units on hand, and we need to calculate the total cost of these. So 14 units at $13.50 is $189, and 10 units at $18 is $180. So when we add those together, we get a total of $369. So the total cost of the inventory on hand is $369, and that is for 24 units. So if we take the average of that, we take $369 divided by 24 units. That's going to give us a per unit average of 15.375. So that is the cost per unit that would be used to calculate cost of goods sold and ending inventory at that time.